You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, guys. Trent Fleskins here from the Perth Property Show. Time for an update on our regional markets. There are some that are much sexier than others to talk about right now. The only person that I want to talk on this topic, Brendon Ptolomey. Thanks for coming back in, mate.
Trent, thanks for having me. Regions, let's do it.
The best stories, I think we start south and we'll end up with the best stories at the top.
Yep. So if we go down south, activity down in the southwest has been subdued over winter. They had a really good run back end of last year, almost anti-cyclical in terms of purchase activity through that market. So a bit of lifestyle stuff, or a lot of lifestyle stuff. You know, we know the southwest is all about lifestyle. And what we saw over all of last calendar year and finishing off at the end of the calendar year really was people essentially selling up out of Perth. A lot of FIFO type profile people going, right, I don't need to be in a Perth suburb. I can, when I come back from up north and working hard, I can have my family in the southwest and recreate down there in between my shifts. So we saw a real push from sell up in Perth. Probably was always their long-term plan if you kind of sit back from it a little bit and think about why you'd be going to do that fly in, fly out lifestyle.
Yep.
So a real push in terms of cleaning out that market as people down south, or people in Perth Metro, began to see down south as the right time to buy. So it's almost the same upgrader story as we talk about in Perth Metro, but they were upgrading lifestyle and probably looking for bargains down south.
Are you talking Bunbury as well when you talk about southwest?
Yeah.
Or is that its own market?
Yeah, it's really its own market. So kind of Dunsborough, Busselton, Margaret River,
Okay.
A little bit of Bunbury, a little bit of Australind. There's certainly that going on in terms of, and Eton obviously next door. Certainly people looking for that newer housing product were going into those areas, but traditional old style Bunbury, not so much.
Okay. I remember when we spoke about Bunbury and the southwest last year specifically, you also said that there are quite a few people that were in the premium market getting a cheap deal as well.
Yep.
A year ago, you guys had on your property clock the southwest as a rising market, like 8 p.m. on the clock. And then you swung it back down to 6 again.
Yeah.
What happened?
Yeah, well, essentially we saw some of those transactions. So in any market cycle, you get to see people come in and clear out the stock that's there. And you think, well, hang on, they've just taken all of that cheap stuff.
Yeah.
And now we're seeing prices rise because there's no real supply left. And we essentially started to think that was the recovery.
And we all wanted everything to be a recovery last year, didn't we?
Absolutely. And really, again, as in Perth market over the last few years, it proved to be a bit of a false dawn.
Yep.
And really what we saw is, and we've seen this in the western suburbs of Perth, we've seen it in other pockets around Perth, around the river, where properties come to the market, they get cleaned out, and then they essentially you think, wow, prices are going up, here we go. And then the activity stops because all the people that wanted to buy, the demand kind of
going. Yeah.
Demand meets supply.
That was it.
Value jumps a little bit. We think we're on the way, and then supply dries up, demand goes away, and we go, oh, hang on, that was a bit of a false dawn, and we move on. So that we saw a little bit of that. Or definitely saw that in that southwest market. So not as much activity down there at the moment. There is still a fair bit of cleaning out going on in terms of the supply, as in the sellers that saw that market rising a little bit and thought, oh, here we go. I'm going to get back what I thought I might get for this property, but they essentially, when they bring it to the market, they find that demand isn't as strong as and as deep as they hoped for it to be.
There's been some stats coming out that the Bunbury rental market has actually been increasing quicker than the Perth market in terms of prices and vacancy tightening. Are we seeing some effect now of people starting to move down there for work in that broader lithium space and all these projects that they're putting in place around that greater Bunbury area? Or is there just been a lack of supply from new builds as well?
Yeah, I think it's both those things.
Yep.
Yeah. So real lack of supply in that marketplace in terms of new builds. All the first home buyers that would have come through to try and buy up or build would have had some finance problems, I would have thought, and so they've gone into the rental market. Then you overlay that with people taking that lifestyle option that we thought about a minute ago and maybe renting instead of buying, then add in that traditional economic activity, which is fantastic for the region. Greenbushes, the lithium mine out there is, I'm pretty right in saying, I think, doubling in size.
Yep.
It's obviously already a very established
It doesn't
operation.
have to be like a FIFO because Bunbury is only an hour away.
Yeah.
It's Bunbury that sees the real benefits from that.
Yeah. So, and being that town centre, all of that activity comes out of there. Obviously, if businesses start locating down there.
Commercial spaces, warehouses.
Exactly. Yeah.
I think it's great.
Yeah, it is fantastic. It's really good to see. Yeah.
Is Kalgoorlie still a bit knackered?
Technical term. Yeah, look, there's still a fair bit of MIP activity that we see in there as valuers. Still a lot to wash out in that market, few socioeconomic issues, but it hasn't gone anywhere in terms of recovery. Again, it's not dissimilar to Perth in terms of some pockets are still drifting backwards and other pockets are okay without being great. Really interesting is the gold price going absolutely nuts because of world security thoughts and fears and Trump having an argument with China over trade and all those kinds of things. Traditionally, the Kalgoorlie property market has followed the gold cycle a little bit.
Yeah.
Diggers and Dealers has been on just recently.
Yep.
So there'll be a few sore heads around up in Kalgoorlie, but we're just waiting to see whether there's any decent change to the economic fundamentals there to drive prices.
At the end of the day, when the gold price goes up, the first thing that happens is the mining companies make more money, right?
Yep.
So that's fantastic for the shareholders, but that doesn't then just directly mean that Kalgoorlie's prices go up in houses. The reason Kalgoorlie's prices would go up in houses is because the gold price has gone up. The mining companies then invest in having more people or increasing their throughput or expanding their mines, and therefore, because they need more people, that's when the property market in Kalgoorlie would go up. That just hasn't happened yet. We haven't seen this long enough increase in gold price to a point where these companies are actually putting their money where their mouth's in, starting to reinvest that profit they're starting to make into increasing their projects and what is a very old industry in Kalgoorlie.
Yeah, and the other thing probably to note there, Trent, is the activity, that economic activity in Kalgoorlie has actually saved the market from going down further. So we had the nickel change in terms of BHP or South 32 reinvesting in mines out there, people coming back to old projects and saying, hey, these are more viable than they were in the past. And then the same with the gold reinvestment, people saying, well, hang on, if the price is going to stay up here and we better start reinvesting.
We may as well stick around.
Yeah, exactly. So that stopped it from going down further. So we'd better have a look at that as the positive. And then obviously we kind of sit back and wait for the return to kick in the future.
Projects. All we're waiting for is projects.
Yep.
So many of them are in that pre-fees and FID stage.
Yeah.
A lot of them have passed FID now, and they're planning for 2021. We're going to move up north a bit more.
Yep.
Now, when we're talking 2021, this is where a lot of my confidence comes from. South Flank, Kudari, Elawani, West Angeles upgrades, Pluto Train 2. That's billions and billions and billions of dollars of projects. A lot of that is people. And where you get these people from, well, it either comes from two places. It comes from paying people in Perth who have dropped their wages by 50% more money to go back up north again.
Yep.
Or getting more people from Europe, essentially, or from the East Coast to come to Perth.
Let's not forget the Kiwis.
And the Kiwis, but the East and East Coast, the Far East, to come through again. All those people need somewhere to live in Perth on their time off. And that's what happened in the last swing.
Yeah. And I think the other thing to think about here is that wave of people that relocate. So I've been on the plane this week to Melbourne and the week before to Sydney, both times going back and forward, seeing the FIFO guys flying back to go to work. So just so happened two guys sitting behind me on the way back from Melbourne this week coming in from Tassie.
Wow.
So and you start listening to these guys have a chat and ask them a couple of questions, and they're relatively new in some of these roles, and they're trying FIFO potentially for the first time. So that travel gets to you after a period of time.
6 months. Yeah.
You get there and you enjoy the money and the job and the camaraderie, and you know the project's going for a fair while. You start going, well, why am I flying home to Tassie? I'll go and rent in Perth on my day off, or I'll move the family over to Perth so that they're closer and I get to spend more time with them. So just those near Perth regional town centres, we are doing a lot of mortgagee in possession type work. So you go to towns like York, Northam, 2J, and then further on from those, there's some real pain points out there, unfortunately, for owners and buyers. Obviously,
what's the reason? Why are people leaving that area?
It's more about just that local economic activity and a little bit of socio-economic issues through a few of those towns, and essentially you find those bottom end properties have become really cheap. So not super advocating for people to run out and buy those, but I'm just saying that there is some pain out there in those marketplace. There is some opportunity for people, and we're talking some really cheap housing out through those country town areas.
In our settlement business last week, we had an inquiry and we got a new client on the buying side. He's buying a property in Meekatharra for $17,000.
Yes, yeah, and we're doing MIPs consistently around answers that are $30,000 to $50,000 in, and admittedly they're in kind of wheat belt country towns and those kinds of things. Yeah. Then we work over to Geraldton. Obviously a big town centre, still waiting for an economic boost. Unlike Bunbury, it's kind of sitting there waiting for things to happen. Obviously, port projects and that kind of thing that didn't come off in the past, magnetite iron, or didn't really give the town the boost that it really wanted to. So it's staying consistent with its usual economic fundamentals. And then we get back to price correction. So a lot of cheap housing through there at the moment at the middle to lower end of the market.
Why do people live in Geraldton, Brendon? Most towns, we can probably name a theme. I'm still trying to figure out, unless they were setting themselves up for that Midwest magnetite or for the port project, or they're just general locals for the lifestyle and whatnot, what fundamental reason there would be for people to move to Geraldton and increase the demand on that market? It's a tough one for me.
Yeah, so that you get back to that fundamental local economic factor. What industry is going to attract them, and it's a bit of a vacant space really for headlines. Yep. And so then you go back to the fundamentals are locals that have lived there for a long period of time. The attraction would be small ones. So I had a look at people that I know that have moved there in the past. They moved there to help set up businesses, become the local valuer, become the local real estate agent or the property manager.
But that all comes from a groundswell of a foundational tenant, if you might say, if I could say that, in the suburb.
Yep.
The Woolworths of town, and there isn't really anything that I'm seeing that's bringing all these side businesses in.
Yeah, and hence why it's really struggling from a property point of view and does need a local economic boost to get prices moving, and obviously immigration into the town to drive some demand and take up that supply. Yeah.
All right, is Newman next?
Yeah, we can talk about Newman. Really interesting town. The projects happening on the edge of Newman are just mind-blowing. The numbers of people flying into the mine site airstrips around Newman are absolutely off the Richter. I'd love to be able to break down those numbers, but I'm not sure anyone but the airlines will be able to tell us that.
Airlines are doing all right.
Yeah, the airlines are doing very well. Hopefully the FIFO guys are keeping their frequent flyers up. Actual investment there, and the numbers of people that have gone to work in that region are huge. But it's a classic FIFO town in that not a lot of those guys go into town. So the average person contracting directly to one of the mining companies is probably not going to leave the camp on their swing through there.
Yeah, they're not going into the local subway on the way through.
No. What you do find is the businesses or the firms that contract to the mining companies, they're the ones that might have a shift where they have a day off each week while they're there for their 4-week swing. And so they're the people that go and spend some money in Newman and get the economic activity of the town going. And they're also, the other factor there would be the people that are the smaller businesses that are contracting to those big mining firms. They're the guys that then start going, okay, I'm going to be in Newman for 2, 3, 4 years on the outskirts of town. I need a base here.
So I need to house my staff.
I need a house. I need my staff to be here. I'm big enough that I need a shed or a storage yard, and that starts boosting that economic activity.
There's a $200,000 purchase is not that much for a company that's subcontracting to BHP, especially if that means that they can attract and keep safe and retain their staff in that essentially nearly zero cost environment for the staff.
And thankfully, since the last boom, Newman has had some changes. So they've got the new shopping centre in town. I think the dome's probably, I'd love to know those trading figures. They're probably one of the busiest domes in WA, and it is a great respite.
The liquor store is the most valuable liquor store in the country.
Interestingly, if those mining services providers those businesses have been through the previous cycle, they would know that as the market goes up and it gets busier, you can really get stuck for accommodation. So they'd be probably smart enough to go in and buy stuff. We've definitely seen the bottom. I think we've spoken in the past about a MIP job that I recall doing there that I think transacted for about $50,000 with a really old house on it, but it's quite livable. And there's still some of that washing out of the market. But those types of properties have if there's anything much less than $100,000 in town now, I'd be very surprised.
Yeah, I'm seeing that Newman's a nice canary in the coal mine, and it reflects in many ways, and with a little bit of a lag, what's going on in Karratha
Yep.
as well. And it gets, because it's that smaller town, it has much stronger swings. That's all.
Yeah, and there's still plenty of supply. We shouldn't forget that. There's boarded up houses around and those kinds of things with different
A lot of them are
ownership
BHP-owned houses, though.
Yeah, so
I don't see them as being really part of the market.
Yep. Yeah, and there's a few government houses in that as well,
Yeah.
a few company-owned houses where they've just said, look, the market's down, we don't need those at the
Yeah.
moment, we'll board them up and hold that supply until we need it.
Yep.
The big issue for Newman will come that there hasn't been a lot of new housing supply constructed in there. Admittedly, there's mining camps going in around there to supply more accommodation, but
it's not the mining camps we're talking about.
Yeah,
It's
exactly.
the accommodation for the subcontracting companies
Yep.
that will flood in, that because they need to be there to
Yep.
offer the services for all these projects starting in 2021.
Yeah, the ones that I see when I've been on the ground there, seen this in Tom Price as well, is that contract. So that there's talk of infrastructure construction up there. So these are different types of contracts where you're not on a mine site and you're not provided with accommodation. You're going out there to build the highways that are going to be extended and new ones constructed. Those guys have got to stay in a town somewhere each night, and if they're going to be building a highway for 2 years from Tom Price through to Karratha, then they're probably going to base themselves there locally and go and buy a house. So, and you have your family there, that kind of stuff. So they're the things that are the drivers for some of the demand. The issue is that is there the supply or the supply going to be there for those people to buy or rent those houses?
For me, it's a game of timing in Newman. I think it's one of those ones where if you can pick the time, I mean, I think it's any time from 6 months ago, really, where you're de-risked in that area until the point where that risk comes in again, which is the back end of these projects, which I think sort of seems like it's 2024 sort of time. If you can get in and out in that time frame, you've got a nifty little speculative investment there.
Yeah, and let's just remember that the people who've already got in have already done really well out of it. We talked in the past about some of those cheap buys with a quick renovation and a flick on to then regenerate again. Yeah.
Port Hedland.
Yeah, Port Hedland's really interesting at the moment. Some really good activity happening in Port Hedland for family-type properties in good locations. Point Cook's going nuts, my valuers tell me. So just that demand coming through there as the market returns, the economic activity returns of the whole town. So locals, investors, people coming into town with new businesses, some pretty decent activity happening there. Values have definitively bottomed out, increased, and we're confident that they'll continue to increase from here. So we are in that cycle where you missed the start, you've missed the bottom, but how much longer do you wait to get in before you wait
really
for the prices to keep going up?
Okay. I think it's a more conservative approach with Hedland. There's probably a little less going on than Karratha.
Oh, absolutely. Yeah. So let's be really clear that we're not getting too carried away with Hedland. It's come off its lowest base in a long period of time. The economic activity is there and the purchase activity is there, but it potentially is also a washout, as we talked about in the southwest. So people coming through going, hang on, there's something I can buy.
A lot of locals.
It's good property. I'm going to buy that now. That supply might dry up and then the demand actually might drift away. Yeah.
Now, one town, and this is why I wanted to leave it till last, that I was in 3 weeks ago. I've spoken to a lot of people on the ground, professionals, locals, local businesses. One place that is, I've no doubt, on the way up in a strong way is Karratha.
It is amazing. We've sat here 6 months ago, 1 year ago, talked about it going up, and it's just accelerating at pace all the time. Our valuer that's based in Karratha is super busy. We're having to actually fly in other people to help her out.
There you go. This is real stuff that when we can look at a case study in an isolated market like Karratha, demonstrate that these things are happening and this is the financial outcome on the properties. That's a fantastic way to explain what will happen in Perth when those factors start affecting the market.
So number one, property bottomed out, and what we've talked about in the past and what we saw there in the marketplace, and it was really great to watch, was the locals come through and go, right, I can see this property is 66% on average less than it was at the top of the market. I'm going to get out of a rental that I've been paying too much rent for because that's what I had to do to live here with my family. I'm going to buy that older 3x1 with a great patio and a pool and a shed they're all the things I want in this marketplace.
They're investing in their lifestyle. They're actually investing in the town. These aren't investors. They're owner-occupied people that are the foundation of this town, which is so important for the foundation of a property market, because they're not the ones that are going to be in and out based on price.
Yeah, no, they were buying based on, and this was a surprising thing, or the lesson for us in the cycle, is that they went and bought the older stock on the bigger blocks of land because they wanted a family lifestyle, and they needed somewhere to put the toys in the shed. They wanted the pool to live around, and they wanted the big patio for shade, as we know it's a hot place to live. They would take all of those things as priority over having 4 bedrooms, 2 bathrooms versus going, okay, I'm happy with a 3x1. We'll fit into that because all the stuff outside's better and bigger.
And it's $300 and something thousand, where these people would have remembered it being $1 million.
Yeah, absolutely.
5 years ago.
Yep. And then the next stage of that cycle, obviously, the investors start sniffing around. The locals start saying, well, hang on, I just bought one for myself. I'm going to live in that one. This is cheap. I'll go down the road and buy another one and rent it out. So we saw that the smart money, as you like to say, come into town and start buying them. That's been really interesting, and really we're still on the back end of that. So it's
not too late.
It's not too late.
We haven't actually seen the boom yet. We've just seen resurgence with foundational factors behind that. And you're right. When I was up there 3 weeks ago, we had a regional market update talking about Perth and Karratha.
Yep.
And we did that in March, and we did that in July.
Yep.
In March, most of the people were there interested in Perth. They want to know what's going on back with their investment properties back in Perth.
Yep.
The fantastic thing that I noticed in July was they were all there to hear about Karratha.
Yeah.
Because they'd all noticed, my mate's just bought something. This is all going up. Rental vacancies are so tight. I've got spare cash. I'm going to buy not only my family home, which I did last year in Karratha, I now want to buy an investment property in Karratha.
Yeah. And so we're still seeing that activity now, and that's what's happening. The other thing happening from a valuation point of view, and what makes us busy, is that those people that bought in at those bottom end of the market prices have been smart enough to say, oh, hang on, I can probably refinance my home loan. I've got an increase in terms of equity, and I'm going to spend that money on either property improvements, which drives great local economic activity. The house I bought didn't have the patio or the shed or the pool. I've now got equity in my property and can afford to spend that.
Yep.
Obviously, liquidity in the marketplace has increased, or availability of finance has increased.
Yeah, banks are starting to play ball finally.
Yep. The other factor that might be there is they go, oh, well, hang on, on the incomes I'm on up here, I've already paid off that really cheap house I bought. I'm going to buy another one.
You get paid by the banks to do valuations up there.
Yep.
Are more banks paying you to do valuations up there than they were a year ago?
Yeah, no. Well, let me just try and work through that question. So we've definitely got more valuation activity. It's up massively, and I don't know those numbers straight off the top of my head, but we're run off our feet. The technical part of that answer is it's pretty much the same banks playing in the marketplace, because there's only a certain number of banks that want to play in that
So
space.
you really, I think the theme there is, if you're going to come off of the back of this episode and have a look, you still need finance.
Yep.
You need to be speaking to a seasoned broker, I would say, to understand who these banks are and how they're going to play ball with you.
Yeah, absolutely. And you're not talking to all of the big four even. So there's only 2 or 3 people that are probably going to play ball.
Well, look, as long as one of them do, we get on with it.
Yep.
And that's the thing. I think at the end of the day, what I've seen in Karratha is a lot of the small businesses starting to come back into town, or resurgent. One of the big civil contractors, he said to me over a drink a couple of weeks ago, Trent, 3 years ago, we weren't paying ourselves. For 9 months, we didn't pay ourselves $1. Now, we can't find time for our families. We're that busy.
Yeah.
And that's the civil earthworks guy. It's a fantastic example of just a very functional job where they need local content and local people, and how that's changed so quickly. The tyre company is going through the roof. Chinese food is busy. All these little things. The Kmart's packed. People are coming into town for the lifestyle, for that live-in lifestyle as well, not just the FIFO. And because I think Karratha is starting to hit a bit of a critical mass of services, amenities. You got your Kmart, you got your Target, you got your Retrovision, you got your brand new medical centre, fantastic high school and junior schools, and then just amazing town vibe.
And recreation
centres, awesome sports facilities, you're right. It's not back in the day where it's just, I can't live there, it's FIFO. A lot of people are actually choosing now, whether they're working for Woodside or it's Rio or one of the services companies, to live there. And that's that amazing foundational owner-occupied purchase, which
it drives the economic fundamentals of the town. So you get locals living there, and that increases local activity. So they're more interested in spending that extra $1 in their town. and they improve the property market as well, as in the housing stock goes from company-owned houses where or even investor-owned houses that lack a bit of maintenance to owner-occupied, cared-for properties.
Bit of love.
Yeah, that get a little bit of love, makes the place a nicer place to live, that's for sure.
Awesome. Brendon, thanks a lot for this regional update today. I think it's cool to see that whilst we haven't seen much difference in the Perth update we had a little while ago, we've clearly seen some changes in the regional update.
Yeah, it's exciting stuff, Trent. And to live through these cycles is really interesting from a valuer point of view and two people that love property. Yeah. It's nice to actually see a recovery and be part of it. Challenge for Karratha next is how do they create more housing supply in there? And so we'll just see what happens next.
Quickly, you're right. How did I forget this? Right, I need to make this very clear on this podcast, on this episode. When any asset is at a market price lower than the price of the replacement of that asset, it is undervalued. That's economic theory, right?
Yep.
It costs about $800,000 to buy a piece of land and build a house in Karratha.
Yep.
The market value right now is mid-400s.
Yep. What
does that mean? It means that no new supply, no new houses will be built until the average price in that suburb or that region gets back to the replacement cost. That replacement cost is currently $800,000.
Yep. And the only other option for supply to come in would be potentially one of the mining companies,
Camps.
a Woodside or a BHP or a Rio, to come and say, we're going to build a whole lot of family houses.
Cheaply, all for nothing.
And we just, that's not their
to make
core
it more
business.
Sustainable. It's not in their interest really to do so.
We know they've done that in the past, but I haven't heard any discussion around that's how they would solve their problem into the future. It may get to that, but I think that anyone looking at investing up there, they are really good fundamentals to contemplate. The fact that if you are trying to, or if people are trying to bring supply to that marketplace in the future, it is going to cost a lot of money.
A lot of money. The only caveat, if you are thinking of going out there to buy, actually go out there before you buy it. Don't buy a property like the spruikers from Queensland are selling stuff that you've never been to. Spend the $400, $500 and fly up there and look at the houses. Walk and drive the streets because it's a street-by-street basis. You can have a house worth $700,000 3 houses away from the worst house in the suburb. That's just how it is in Karratha.
Yep.
So make sure that if you are going to buy a property in Karratha, which we both think is some great fundamentals, you actually go and see the area first.
Yeah. I'm always bemused by this, Trent. I know people are really used to shopping online these days, but it's a little bit like buying off the plan. You're making one of the biggest investments that you're ever going to make in your life.
Yeah.
You don't buy cars unseen. You don't buy your principal place of residence unseen. Why would you go and buy an investment property without going to see and touch it?
Especially when that investment is less than $1,000 all in for accommodation, flights. Take your missus, have a good weekend, check it out. You might even want to live there, right?
Yep.
If you're going to spend $500,000 on something, invest $1,000 to figure out what it is you're actually buying.
Yeah.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!